What is going on, investors? Hopefully you guys are doing well out there. Time to talk about Roblox Corporation, ticker symbol RBLX. Now, during the regular session, stock was up 7.29%, up to about $73.30 per share. But in the after hours, we are not liking this. This thing is down 15%, closer to $62.32 per share. Talk about what that means from a technical perspective as we've pulled into kind of a channel. Talk about where Roblox could be headed from a technical perspective. Now, those earnings came in and they missed on both the top and bottom line. That's usually a bad sign when you're a new company. They missed on that EPS side. Investors were expecting a loss of about 25 cents per share. That missed expectations by 13 cents. Revenue came in at $568 million. That's good for 83.5% year-over-year growth. So imagine growing your revenues by 83% year-over-year and missing expectations by $212 million. This could be a case of maybe management, maybe a little over-promising, and maybe it could be a case of analysts over-expecting things from this company, because there's some pretty big misses for a relatively new company. People might just be trying to understand how to value this business. On top of that, you got a $40 billion market cap on this one. And then when we get over to the revenues, you just had a full year where you printed $1.9 billion to the revenue side, and you exceeded that with $2.4 billion worth of costs. And so there's probably a lot of investors saying, well, this stock is pretty healthily valued, quite frankly, from an earnings and revenue perspective. Now, they gave us some insight into the January month. Okay, we just ended the quarter that ended in December. So they gave us some visibility into January since they already have those numbers. And for the most part, revenue looks like it's ticked up a little bit. Daily active users in line with where we've been, certainly from a growth rate perspective. And then engaged hours, basically people spending that time on the platform, also looks comparable to the previous quarter, and it's up year over year. So things look like they're moving in the right direction with Roblox, at least in the month of January. Now, revenue came in the most recent quarter at 568. That's $568 million. We showed that to you here. That's 83.5% year over year growth from the previous period. Now, unfortunately, what I think investors don't like is you notice your total costs and expenses basically went up. It looks like even more. You went from $378 million all the way up to $708 million. Now, for the full year paints an identical story. You went from $923 million on the revenue side last year. You ticked that all the way up about $1 billion to $1.9 billion. But unfortunately, look at your costs. They went from 1.19 up to 2.4. So you grew these by about 1.2 billion and some change. And you only, I say only, grew your revenues by 1.1 billion. So yeah, you guessed it, your loss from operations accelerated actually in the most recent year, despite the accelerated revenue growth from 266 up to 495. Now, some of you might say, well, some of this is poured into sales and marketing. Not really. When you look at sales and marketing over at this company, this game basically sells itself, okay? They didn't really accelerate their sales and marketing, which you'd expect sometimes with a game maker, okay? They spend a bunch of marketing money up front, acquire a bunch of users, acquire a bunch of players, and then monetize those players over a period of time. It doesn't appear like Roblox really does that. They're investing heavily into this R&D and this infrastructure and trust and safety. So they're investing a ton of money into the actual platform. Not only that, they share commissions with people that make games and experience on Roblox. So that's part of the cost structure as well. This is a company that has to invest a fortune into this. And so it has to start scaling at some point. Otherwise, the valuation certainly looks incredibly rich from that perspective. Now, from a cash flow perspective with Roblox, we're pulling down net income numbers that are relatively the same from the operating side. You notice I don't always come down to net income. And when the two numbers are relatively equal, you can actually come to cash flows and very confidently analyze it. Okay. Sometimes interest expense, or sometimes a company sells a company or buys a company or loses money on a company, and that is included in net income. Notice these numbers are very close. 139 to 147, very close number. Okay. 495 to 503, essentially rounded up the same number. So we're pulling those numbers down on our cash flows. We're able to see the cash flows from operations on this. Okay. Again, sometimes net income is skewed. That is the number you pull down to your cash flow statement. So when this number differs tremendously from statement of operations, you want to factor that in. In this case, they're almost identical. So we're getting a great look at how this company is doing from a cash flow perspective. Now, it's not that great on this screen that is darkened out, but we can see cash flows are actually pretty strong on this. They're benefited by the most part, the fact that they have a lot of stock-based compensation. In the most recent quarter, they did 120 million of that. Okay, they lost 147 million, but 120 million was in stock-based compensation. You can imagine with the amount of developers that they have working on this game, a lot of it is being compensated, or a large percentage is being offered as stock-based compensation. You see, when you strip that out, you actually get positive cash flows of 122 million. Now, unfortunately, that's not even as good as last year. You were actually better last year at 179. You see, year over year, Paint's not quite the same story. You had positive cash flows of 524 last year. That is ticked up to about 659. So depending how you look at this company, I think the bulls are going to come over here to cash flows. The bears are going to look at net income and operating profits. And look, I think the combination of the two are both right. You have a very fair amount of stock-based compensation in here. You also have to subtract accounts receivables, which is actually a positive sign for this company to have cash that they are going to receive. They likely maybe collect money up front and then have to recognize that as revenue down in the future. From a balance sheet perspective, company looks great. Got well over $3 billion worth of cash and receivables and has very little on the liability side. They have about $1 billion worth of debt. Nothing really that is out of control. So company looks pretty good from a balance sheet perspective. Looks actually really decent from a cash flow perspective. From an operating perspective, though, it is kind of a mess. Now, what we've made here is I've got these two very thin purple lines. These are representing some downward channel that this stock has been. Look, it's peaked out over November. I remember we did a video on this stock when it announced earnings back in November, and it gapped up here to the $100 range. And I think I remember my analysis is, hey, if you can break above this 100, yeah, you've got some really good, I mean, the sellers basically drive up. You could play the breakout. Now, maybe some of you did that. You hit a trailing stop all along here because once you got back below 100, technically this entire uptrend is completely broken down, and you see what happens when you break uptrends. Okay, we break from 104 and we actually broke our lower end of support, which is somewhere in here. I may be biased by putting it where the stock is today. I actually think this level of support is down here closer to $70 per share. But you see in the after hours before the stock announced earnings today, we were actually over a level of support and we had broken out of this upper channel. That is incredibly bullish in the shorter term, but unfortunately we have pulled all the way back into our channel here, our downward channel, with a big red candle more than likely showing up tomorrow. So we've pulled back from up here at 70 all the way down here to 62. We are now back into this downward channel. So this at the shorter time frame is going to look like just simply a temporary breakout of this channel, and we're more than likely stuck back in here. Unfortunately, technically, this one was looking good here for a minute, but I would have probably told, some of you might be saying, why didn't you tell us this before? I would have told you this exact same thing from a technical perspective, that you've broken out from the channel. You're on a level of support here at 70, but you have earnings. And with these newer companies, we are seeing that the market is having difficulty valuing this one. When you see a company miss by this much, it could be that management is overselling the opportunity and overselling the financials, or it could be that just analysts don't necessarily get a good read on revenues and profits that this company is likely to have based on the information that they're giving you and the information that we have over previous years. So we'll see how this investment materializes. Look, $40 billion on a company that just did, $2 billion worth of revenue for the most full year, and their losses accelerated. Not necessarily a stock I would want to touch. I would expect this one to be highly volatile. You have a lot of other video game makers that have much higher revenues, that have profits, and also have a much, much larger portfolio of games. With Roblox, you gotta hope that this game is basically like something that people will continue to play over the course of their lifetime, and we just don't have a ton of examples in the video game space, or it's certainly the metaverse space, or however you want to view this company. There's not many examples like that, so you're taking an incredible risk investing in this company. Not only that, we've pulled back into this downward channel. We got to wait again until this one burst up through the upper channel and over a level of support, which it did, and it completely broke down. So in the shorter term, I probably would avoid this stock. That was Roblox. Hopefully you guys enjoyed this video. We'll be back again soon with more. Good luck with your investments.